Next up, if we can bring Patrick into the fold in what is becoming I'm sure, a valuable and important part of this conference. We're going to have a conversation with Patrick de Cambourg, the chair of the ESRB rather. And as you are all aware, EFRAG has done an enormous amount of work over the last several years to create a set of standards that oblige double materiality, that is impact on society as well as impact on companies, set of disclosures across a broad range of themes. This morning this conversation comes at an important time. There's quite a bit going on, but thank you very much for your time this morning, Patrick. I appreciate that you are extremely busy, and we are extremely glad to have you here. Thank you very much. And I trust you're well, sir.
Yeah, good morning to all. Thank you for your kind introduction.
Thank you, Patrick. We are sort of living in interesting times, aren't we? And there is plenty of chatter from issuers, from the accounting profession, and from some political quarters that CSRD, which is the flagship initiative from the European Union on sustainability disclosures, should be restricted or delayed, and some people would like to see it axed. Recently, just a couple of weeks ago, President Ursula von der Leyen suggested there should be modifications to a number of pieces of the Green Deal, including CSRD in what she called an omnibus set of amendments. But at the same time, thousands of companies have been working to prepare their first CSRD disclosures in conformance with the requirements of the European Sustainability Reporting Standards, which you and your team have developed, the ESRSs, and that effort by EFRAG, it has been the guidance that all those companies require. So a large number of those companies have been doing the sensible thing and preparing from the outset for digital disclosure in year 2, which means inline XBRL reporting in 2026 for the financial year 2025. So a little bit nasty question, but how's your crystal ball, Patrick? Do you have any thoughts about what Europe should be doing with its new sustainability reporting requirements in what appears to be an increasingly turbulent macro period?
Well, thank you for this question, which obviously is very timely. Maybe two initial comments. First one, I do not have a crystal ball. Maybe three initial comments. I do not have a crystal ball. Point two, we at EFRAG are performing a technical task, which is technical advice to the European Commission. So we operate under a mandate that has been given to us by the European institutions. So the political debate, we may have a view, but we are not the decision makers. And point three, what I'm going to say today is, of course, in a personal capacity. So, please bear that in mind. Okay, I think that since the European elections, and as at every end of a cycle, between the elections at parliamentary level and the appointment of the new commission, there are a few months that are prone to, rumors, all sorts of, comments. And of course, there is a host of contradictory statements that are made. However, if we take the helicopter view, one, I would say that sustainability reporting for me is a mega trend. So it's here to stay. I think that everybody has spotted the limitations of the financial reporting related data, which are, this is not a criticism. It's just that on the basis of the conceptual framework of financial reporting, you know, there are very strong foundations, but there are also limitations to the amount of data that is delivered on companies, and also for companies to make that to make their own management and governance decisions. So we all know that companies go beyond financial reporting and that stakeholders and users need more. So that's why I think it's a megatrend. Now, in a megatrend, you can have bumps on the road, you know, of course, and that's what we are going through, a period of uncertainty until the Commission is in place, and I understand that the Commission will be in place December 1st. I read that yesterday evening. So finally, an agreement has been reached on the composition. So there will not be further delay, and the Commission will start working. So we are calling at EFRAG. We are calling for, you know, a clarification of what could be adjusted, because we are conscious of the significant burden. You know, the step that has to be climbed by companies is not a small one. We understand that. That's why, by the way, incidentally, we develop significant activities on the implementation to support companies and other stakeholders. Parenthesis closed. And so we are conscious that in a real piece of legislation that was, quote unquote, considered game-changing, but that is implemented very quickly, there might be adjustments. We know that. Well, the first adjustment, which is coming from an overall recommendation of Mario Draghi, is to consider, you know, a specific category for the smaller, large companies. Because, as you may know, as you certainly know, in the EU, the CSRD applies to large companies in a mandatory way. But large in the EU is not so large, because it combines the multinationals with tens of thousands of employees, and sometimes more than that, many more, and the companies with 251 employees. And as a standard setter, it is very difficult to make something, to make a standard, to prepare, to elaborate a standard that satisfies the spectrum like that. Because either you downgrade the level of information required from multinationals, in which case you probably are working on the basis of the lowest common denominator, which is very, very, very low, or you try to capitalize on the best practices to reach the objective, which is a good platform of ESG-related data that would kill the many initiatives that are uncoordinated and that are burdensome for everybody, in which case you are more on the upper side of the expectations. And that's what we have done. So, you know, we would welcome, I think, common sense could lead us to accept, to determine what would be a simplified model for the lower layer of that very large spectrum of companies. And by the way, we have something on the shelf already, which is the standard that we have prepared for listed SMEs.
Yes.
So that's one thing. The other thing is sector-specific information. Sector-specific information is, to a certain extent, misperceived as a burden. We tend to think that standardization is a little bit like XBRL, but standardization is simplification, you know, at the end of the day. So, you know, when you create the sector-specific layer, you reduce what is needed in any way, which is the entity-specific layer of information. Because as you know, the architecture of standards under ESRS is sector agnostic, sector specific, and then entity specific, which in XBRL you would call extensions, I guess. So anyway, once you have performed your materiality assessment and determined what are the critical sustainability matters that are material for you, you need to go to the sector agnostic, see if you have the proper disclosures in the standards. If you don't, you go to sector specific. And if there is no sector specific standard, or if this is not covered by a sector specific standard, you go to entity specific. So it's communicating vessels. So in that camp, you know, personally, I think that we need to continue developing sector specific standards. But, you know, the application date can be discussed because anyway, the first standards would not be applicable before 2026 or 2027. You know, so, and by the way, we have 35 sectors to cover. The plan is to cover 11 to start with, the high impact sectors plus the three of the financial institutions. So, and all of this would be ready, you know, in 27, 28, or 27, 28. So, you know, there is a level of excitement which is maybe a bit based on a misperception. But, you know, here we can give certainly, you know, an element of relief to people if they prefer to develop their entity-specific disclosures for a period of time and use standards as they are developed as guidance, and then they would become mandatory. Why not? And last but not least, this is a topic on which we insist and which will be dear to your heart. You know, we cannot speak about burden reduction and not speed up on digitalization. Because, you know, having thousands of reports under a PDF format on websites that users would have to access to perform their own, you know, assessment is not possible. Well, it's possible, of course, but it's extremely burdensome. Because in burden, we tend to forget the users. And users consume information under a digital format. Or if you don't give the information, because we have seen that for financial reporting, it came in Europe. It came too late, and it came in an appropriate level of depth. So that's why, to a certain extent, providers have played their part and have organized the information, but at the end of the day, delaying and having, you know, not free of charge access is a limitation and is creating a burden and a cost. So the combination, I'm not saying that private initiative is not good. I'm saying that it has to be based upon a system that is digitized, one, and as soon as possible, free of charge.
Thank you very much. And that leads very, very nicely into my next question, which is that, as everybody here knows, the EFRAG, ESRS are the standards, but they have to be reviewed by ESMA prior to an official consultation on its implementation in the form of an implementing RTS, a regulatory technical standard for those not familiar with the extraordinary numbers of acronyms in Europe. That process is underway. I mean, what feedback have you received from preparers, from users, from software vendors about the ESRS taxonomy, and what advice can you offer to ESMA to encourage successful adoption of this digitization aspect, which is so important, as you've just described?
Well, first of all, let me highlight the options that we have taken when we have developed the XBRL taxonomy for ESRS. You know, we, by contrast with financial reporting, narrative information is autonomous and has a value per se. When in financial reporting, narrative information is explaining figures. So we, from day one, when developing the standard, and then that was translated when developing the XBRL taxonomy, we said, how can we create an environment for narrative information that would be, comparable and relevant? So if you have a look at our standards, and the XBRL taxonomy is reflecting this, we decided that instead of having, I take an example, instead of having one sentence saying, please describe your governance in relation to sustainability matters, which is the objective. We said that, but we said also immediately, you should include A, B, C, D, E, F. And sometimes under A, B, C, or D, you have 1 Roman, 2 Roman, 3 Roman. So we have created, quote unquote, milestones that when preparing their reports, companies have to consider in order to offer, a relatively granular and therefore structured disclosure. So we have translated that into the digital taxonomy, because the clear instruction that has been given to the great team led by Richard Bosson together with Andrea Giannini, has been to say, please do not aggregate or disaggregate. We have decided that standard setting, what was the level of granularity that was needed to create comparability of texts, because text blocks, at the end of the day, unless you count on artificial intelligence, okay, it's better if it's structured properly and tagged as a consequence. So that explains a lot the misperception on the number of data points, because we have, in our implementation guidance 3, which is then reflected in the digital tagging, we have a little less than 800 data points, out of which 70% are of a narrative nature and precisely derived from the structuring of narrative information into a number of steps for each objective. We have 82 disclosure requirements, 70% are narrative. So, we translate into data points. But, at the moment in time, we could artificially reduce by saying we keep the objective, it's 1, but we don't mention the 10 steps below. So this is one of the reasons why data points are a bit scary. And I had the opportunity to say that we have been a bit too technical and a bit too honest with the explanations, because we wanted. And by the way, it's a great tool, because IG3 and the digital tagging that has been delivered to the Commission at the end of August are wonderful tools for preparers to make sure that they are not missing anything. So it's not a tick the box exercise, but it's good guidance. So my recommendation sorry to have taken this opportunity to clarify on data points. By the way, I mentioned something else. In the quantitative one, we have taken 130 data points that are stemming from other EU regulations to make sure that they would be in the same place, and that you have a sustainability statement, which is a separate chapter of the management report, which is the equivalent of the financial statements, and where you park all standardized information. And of course, we wanted to make sure that the flows with other regulations were organized properly. So we have, out of the 800, we have 100 and plus that are stemming from EU regulations. So like SFDR, sorry for the acronyms, climate law, Pillar 3 for banks, etc. So now, recommendation-wise, I think, frankly speaking, that, and I had the opportunity to say this to my good friends at ESMA, please go as fast as possible. And point 1, and point 2, do not, modify the granularity of information, which is anyway subject to materiality assessment. Because when we started the journey back in 2020, after 4 months, we said digital from day one. Okay, so we hope that this will be the case. It might be day 2 or day 3, but not later.
Thank you very much. I mean, almost as an aside, it is too easy, I think, for people to look at a new set of regulations, especially when you've got a digital representation of them, and do multiplications out and come up with large numbers, which might make for some press inches, some column inches, but don't really help the debate. Not least because certainly the work that we were talking about yesterday in our AI track, we know that these more granular narrative disclosures can be more effectively used, consumed, and compared than larger tracts of text. So this process is an ongoing one, but we wish you all the very best of luck as we go forward. And thank you for those comments. I've had a lot of discussions with investors and data providers over the last 12 months in particular. And it's incredibly clear that there's a really enormous appetite for digital feeds of data from CSRD disclosures. But both data quality and assurance will be critical. How is EFRAG working to ensure that the taxonomy supports robust validation and auditability and the production of high-quality, comparable data for stakeholders?
You know, for us, it starts with the elaboration of the standards, you know, because clearly the taxonomy should reflect what the standards are, requiring. So, and that's why when I explain for narrative information, which is a significant part of the of information, because, you know, excuse me, I would like to highlight the fact that in financial reporting, you are based on one unit, which is monetary. You are recording, you know, it is a summary presentation of a recording of all transactions under, you know, the wonderful system where debits equal credits. So with a sense of comfort, which is very high. So this is, while for sustainability reporting, there is no primary statement. There is no equivalent of a P&L or or balance sheet. So you need to have snapshots on a number of challenges or transitions that companies are confronted with. So this very difference is creating what we tried to embed into our standards. So trying to create comparability, and I explained on narrative information how we tried to do it, trying to provide relevance and faithful representation of the reality under a comprehensive coverage. Because it's very dangerous, by the way, to put the emphasis on one sustainability matter at the expense of the others. Like, let's say you try to solve climate, but you close all your plants, because that's one way to solve climate change, to stop producing. Yeah, of course, it works. But, you know, just transition is the counterpart, which is the social aspect of tackling climate change. You know, just transitions in general imply that you disclose on social consequences when you disclose on environmental action plans. So that's why in the EU, the idea of a comprehensive coverage is, in my view, the right approach. So when standardizing, we took all those options. And for me, the key point in the XBRL taxonomy is to make sure that we are not betraying that objective and that we are aligned with that. And you can, Richard is attending this conference, so Richard Busson, so he will happily comment on that if you so wish during the breaks. We were extremely strict to make sure that there was a good transposition between what we were requiring in the standards in human in human readable format to make sure that the reality, when machine readable, would not be aggregated, disaggregated in a way that would betray the spirit of the standard.
Perfect. Thank you very much. I'm sure everyone in this room, wherever you're from, will have seen a host of announcements from EFRAG over the last 12 months, talking about alignment. So there's been a key piece of work between EFRAG and ISSB on aligning their standards. And then more recently, there's been an announcement with CDP, for example, as well as GRI. Tell us what's the overall goal of these connections between the standard setters, please, Patrick. How many, many companies expect to report in due course under multiple mandatory sustainability frameworks, such as CSRD and ISSB. And of course, a significant number of companies across the EU have voluntarily reported under CDP or GRI for many years. How do you see all of this coming together? Can you give people your perspective on that question?
Yes, first of all, let me state that the EU, and that's what is creating the level of excitement today, is probably the first jurisdiction to create, such a large scope for a mandatory regime of reporting. Yeah. So mandatory, and when we established the standards, we capitalized on what had been done, on what was developing. So, what had been done was GRI, TCFD, what was being developing at the same time, even if we started a bit earlier, were the ISSB standards. So, we are very, very clear. We do not encourage multiple reports. So we want that, and I think we achieved that, when you report under ESRS. One, you comply with ISSB, subject to a few, but very few, nuances to be considered. Plus one point, which is financed emissions, which we are not covered in the sector agnostic layer because it is banks. So, but we have no objection on the contrary. So very, very, very close to full overlap. That way. The other way it might be a bit more difficult. So when you report under ESRS, you comply with the ISSB. Point two, we stated that. You report with reference to GRI at a high level of commonality. We have embedded, of course, TCFD. We have embedded TNFD. And now we declared last week or the week before that with CDP, we were working to make sure that when you report under ESRS, you can fill your CDP questionnaire, which is one of the repositories that during this period where the public utilities are not available is a great tool. So that's what we are trying to achieve. We believe that the momentum supporting sustainability reporting should not be hampered by the idea that multiple reports are needed. In terms of digital translation, it means that, and this is something I've been supporting for a long, long time, once you have tagged your ESRS information, there should be an earmarking saying, this is as well an ISSB tag, or this is as well a GRI tag. So ideally, maybe I'm not an expert, so I speak to experts and I apologize in advance. But for me, if I'm confronted with a database, a tagged database, I should be able to say, I want to read ESRS, I click one button. I want to read ISSB, I click another button. I want to read GRI, I click a third button. And for me, the earmark, what I call the earmarking system, I know that Richard doesn't necessarily like that term, but if I have a tag that is earmarked and that is the bridge between the three systems, for instance, and others, you can do it. And that's the ultimate objective. And complexifying the life of preparers for me is in contradiction with the megatrend I was mentioning earlier on.
I think that's a terrific set of statements, and of course we look forward to the manner in which digital reporting can assist that process. And indeed, there's a whole series of conversations later this morning on exactly that and the technical mechanisms. So thank you very much for that. I'd like to return to, you made some points about smaller companies earlier. And, is it the case that the ESRS tax standards and, of course, the taxonomy aim to standardize sustainability across a range of industries and jurisdictions? And you've already discussed the questions about sectoral processes. Tell us a little bit more about the way you see SMEs completing their requirements for disclosure under CSRD. I guess what I'm really driving at here is that when you talk to SMEs, they've all got survey overload. They're getting asked by different supply chains, by different customers, by different suppliers for a lot of information. Will the CSRD framework assist that in some mechanism? Perhaps you could tell us about what you're thinking in terms of SMEs.
Well, it's not only thinking, it's something we have achieved because we have taken a decision last week. We have adopted a standard for SMEs that you know that SMEs are not in scope. So they have no obligation. So it's a voluntary standard, which we call VSME. To elaborate this, what did we do? We put around the same table the preparers, so SMEs, the banks, and the larger companies in the supply chain of SMEs. And we said, guys, would you want to continue with your uncoordinated questionnaires coming from all over the place and flying around? Or would you like to agree on a platform of data that the SMEs would feel comfortable to prepare and that you banks would accept as the basis for your decision-making for loans, and that you counterparts in the supply chain are happy to support because you need information for your own information system. And we reached an agreement. So I think, if, and we are delivering this standard to the Commission before Christmas, and that has followed a long process. You can't imagine how many outreach events we had, a consultation period of 4 months, and blah, 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 etc. So no, we streamlined, we revised a little bit the structure, but not much. The spirit is the same. We received by the public consultation huge amount of support and very good suggestions, so which we embedded in the final text that we have just approved. So this is, for me, a major way forward to involve SMEs into the momentum. Because, it is their interest. First of all, for management purposes. Even a small one is confronted with maybe 1 or 2 sustainability challenges. Better to identify sooner than later, rather sooner than later. 1. 2, if they want financing, they will be asked. And 3, if they don't want to lose their client base with large companies, they have to. So, both from an internal management perspective and from a business relationship perspective, we believe that that is the right track. In addition, John, I think it should be, you know, our view is that there should be tools, templates, you know, digital templates to facilitate, you know, the use of that. I know that, you know, I'm an old man, so I come from the accounting profession originally. But I know that for bookkeeping, there are extremely efficient softwares. I don't know why there wouldn't be good templates and good softwares for SMEs to be able to meet the expectations that they have on the basis of the regular advisors that they have. This is my view.
That sounds like a set of opportunities for many of you to be thinking about. And if you've not discussed these kind of pain points with SMEs, do so. Thank you very much. That's very helpful. And I know we're going to be talking more about the VSME framework later today. This event brings together professionals from across the world that are involved in the entire business reporting supply chain. Some of them, especially the software vendors and the accounting professionals, are helping their clients get ready for CSRD. Do you have any particular advice? We're not far away from the first reporting framework, and then a year later we're expecting the first digital reporting to come to life. Any writing instructions for all those involved in that process? You mentioned it at the beginning. You've heard me, and I'm sure many others say much better than I do, that we sort of see this as a seismic change for a lot of companies because they have to have the same rigor and the same set of processes and controls around the preparation of these materials as they have traditionally only given over to their financial statements. Is there any advice for the runners and riders, if you like?
Well, you know, first of all, don't be too influenced by the bumps on the road that may appear at political level. If you believe, as I do, that it is a mega trend, you know, there will be. It's amazing to see sometimes the disconnect between certain very high-level discussions and what I see coming from the field, from the ground. You know, we were in a conference on Friday organized by the European Commission, and it was very obvious that an ecosystem is building up.
Yeah.
So, of course, in an initial phase, people are looking for tools that they don't have. They see value chain as an obstacle or as a difficult hurdle to jump over. They are pretty careful with the number of, so they can highlight the difficulties, and rightly so. But on the other hand, you know, if we are reasonable and you know, it's a long-term project. I try to explain to the people I meet, which are, you know, you may have as well perceived this. Being a standard setter, you work long-term. And the development of standard is taking 2-3 years. Then the implementation takes 3 more years, and that's already very quick. Yeah. So, you know, you cannot, it's not a stop and go. So my recommendation is be steady to continue contributing to the ecosystem that is needed, and in particular in the digital world, because you know, we are in the 21st century already, soon in the second quarter of the 21st century. So, you know, we are not working on the basis of, you know, no electricity, etc. So you you know, so we have to be modern, and that's all an old man that tells you that.
Thank you very much. And lastly from me, perhaps there'll be time for one question or 2 questions from the audience, but lastly from me, there are regulators and policymakers in this audience that are responsible for sustainability disclosures well outside of the EU. EFRAG has been very internationally active over the last 12 months. Does your experience over the last few years mean that you have any advice for jurisdictions outside of Europe that are working towards mandatory sustainability disclosures?
Well, we produced for the G20 paper whereby we were mentioning the key decisions that have to be taken by other jurisdictions, and we are respectful of their, local and circumstances. However, we tend to think that one, the system should be covering the broad spectrum of data. I mentioned earlier that it would be dangerous to focus on one, because you would do that at the expense of other. And we know that, let's not make the mistakes that we did in the past by focusing too much, I don't know, on earning per share and not, building profitability long term, etc. So things that are obvious. So, confronted with a complex reality, oversimplification is dangerous. Point one. Point two, don't fall into the trap of the controversy regarding double materiality. Because I think that impacts are a key driver for risks for companies. So what you do to people and planet has a rebound effect on you, because you will be asked to solve it. And by the way, all material impacts that you may have as a company are creating financial risks. So the idea that there are two separate legs of report, that you would have the financial statement, you would have the the financially related sustainability report, and then you would have the impact report. I'm not sure that works. I think that it's better to aggregate the last two into one piece, because conceptually it is highly interconnected. And last but not least, please, digital from day one.
Patrick, we're incredibly grateful for your time. I know you're really busy. Is there one question from the audience? There's one here. From a familiar voice, I think, Patrick.
Thank you, Patrick. So I'm Marc Coulier, so from Corporate Things. I'm a user, and I highly anticipate, the data that's going to come next year. I highly appreciated your remark on the burden also being to users. And as a company who also has my own investors, I would like also to remind that investors make companies pay for the cost of research. Whenever investors invest, they have this line that they bill to the company saying, this is how much you cost, so you have to do that. I think when it comes to the cost assessments, ESMA is the one responsible for that. I would like to know whether EFRAG is also involved in helping ESMA doing the cost assessment, since you are aware of this burden and cost to users, or you also being the one, EFRAG, with the most connections to all stakeholders, advising ESMA on making the cost assessment. How can we make sure that ESMA in their cost assessment is going to take that burden to users into account?
Okay, so first of all, we operate in a technical capacity, and our remit was to prepare the digital tagging that is, the natural consequence of our standard setting activities. Now we have transferred the baton to ESMA and the Commission. Now we are at the disposal of ESMA, and they know that, to help them. Let me mention also that we conducted a cost-benefit analysis on this. And by the way, there are strange rumors that sometimes are flying around. The first one is that, some people mentioned extravagant costs per data point. So, when you do not understand fully what a data point is, And when you multiply by an extravagant cost per data point, forgetting to mention that there is an initial period of investment and then that there is a running cost, you end up with figures that are frightening. So, if we can dissipate those misunderstandings, that's the good idea, and please contribute to that. We are doing our part by being at the disposal of ESMA, and we work with them. But it is their remit, so we are just advising and consulting whenever we are asked to do so.
Thank you very much, Patrick. We really appreciate your time and your very thoughtful responses to those questions. Please join with me, everybody, in thanking Patrick for his presentations this morning.